So we know this reading is going to be pretty poor. The question is, how sustained is this downturn? And if we do see that lifting of restrictions over the next few weeks and months, how well positioned is the economy for a sharp rebound?
Thank you for your question. I think that's a very fair and probably the zillion-dollar question now. People are all wondering what exactly it's going to take for policymakers to pull out bigger, policy measures to try to help. I think over the weekend we're seeing the start of it. This is top-down, so the PBOC and CBIRC announcing together this collective, policy measure to cut the mortgage interest rate. We think this is quite encouraging. However, the magnitude of the change is pretty limited, and therefore I'm not necessarily too positive that this will immediately boost overall growth, especially the demand from the property market. I think what it takes, however, is for credit expansion to accelerate, and it takes more than just a 20 basis points cut in mortgage area. We need to see much more than that. And in fact, in our view, there are three things that currently we see as an impossible trinity, which is 5.5% growth target, and also the zero COVID policy, and last is the the deleveraging. So out of the three, only two got to exist. Something's got to give, right? So we think that the most likely outcome is that we stick to zero COVID policy, and we see policymakers also sticking to that 5.5% growth target. But at the end of the day, they will have to start re-leveraging. If they can manage to do so, we can see stabilization.
Yeah, there is always some sort of impossible trinity when it comes to those economic and stability priorities for China. So the deleveraging has been on the back foot for quite some time. So do you see just the piling up of systemic risk then?
Absolutely, Heidi. I think the biggest problem that we currently see is the continued, current pressure on credit, and to the extent that the business confidence is being shaken, and therefore credit demand is now fundamentally being damaged, and therefore it takes more than just a simple interest rate cut to boost the credit demand. We are hoping to see maybe some combination measures. So, for example, infrastructure investment / social housing projects. Basically offering semi-sovereign type of credit worthiness combined with low funding cost credit. And when we see this type of measure coming out, I think we can turn much more bullish.
How are you feeling about the Yuan at this point, given the weakness that we've seen recently and its tolerance level by policymakers?
Well, I think the Yuan weakness is probably in the near term unavoidable, given that we see the divergence between the PBOC and the Fed monetary policy relative tightness. But keep in mind that we think exchange rate depreciation could potentially also help to the extent that it will help loosen financial conditions. So if you couldn't boost the credit conditions boost the credit expansion fast enough, the alternative is to actually get a little bit of currency help from depreciation. So if we can have both, I think that will be quite helpful for growth to stabilize.
Can growth stabilize without really a lifting completely of the COVID zero policy? And what does that mean for the very ambitious 5.5% growth target by policymakers?
Sherry, fair enough, that's such a question, but I think many people say this is a dilemma. You have either or. Either you have the zero COVID policy, or you have growth. But I don't necessarily think that these are necessarily directly at a conflict. In fact, we think that if they can start with a stabilization in infrastructure investment and manage to boost the property market, we think there is a fairly good chance that we could see a little bit of improvement, even if when they gradually relax the pandemic control measures. Of course, the zero COVID policies are not going to stay this tight for the next 6 to 12 months. We think it is on the way to gradually be.
We know that the correlation between that GDP target is always to maintain stability in the labour market. We know that Li Keqiang has expressed his concerns over how grave and complicated that situation is. Do you think they can they can achieve the objectives when it comes to maintaining jobs and stability?
Well, I think it is possible that we're seeing that the labor market stabilization with the help of more targeted measures of SMEs and also from social security perspective, the help not only to small companies but also bigger ones. But I would say that it is important to keep in mind that labor market is only a lagging indicator. That means we need to first see credit expansion coming back. And then we may see, after 3 to 6 months, some activity growth indicator restoration to pre-COVID levels. And last, we could see maybe some labor market improvement. So it would take time. But at the moment, I clearly think that clearly that the policymakers are very much on top of that. And we think that the most important thing, the priority at the moment, should be set to get credit back on.
Looking for an advantage?